So most of the industry is focused on the dollar rails, but you're really bringing and this is, I think, a really, really important thing, like the local currency bonds on chain.
If you wanted to create a hedge product in TradFi, it is so difficult, like near impossible. But on Stellar with Stablebonds, you can do it today. On Blend, you could be a 16-year-old.
Welcome to Block by Block, where we dive into topics at the intersection of crypto, tech, and society. I'm your host, Denelle Dixon, CEO and Executive Director of the Stellar Development Foundation. Join me as I sit down with a different expert each episode for a conversation on how crypto and blockchain are shaping their corner of the world. In this episode, we're talking about something big, the future of local money. While most of the industry is focused on building dollar rails, Etherfuse is taking a different approach. They're focused on bringing local currency sovereign bonds on-chain through what they call Stablebonds. Dave Taylor, who is the co-founder and CEO of Etherfuse, joins me to talk about how tokenizing bonds can strengthen local economies, expand access to savings and yield, and keep financial rails open and interoperable for everyone.
Dave, it's so great to see you again. The last time we saw one another was in Rio. Actually, we saw one another at the airport on the way to Rio for Meridian. And after your lightning talk on the main stage, I was like, hey, man, we need to have this guy on Block by Block. So I'm really glad to have you here. And I'm also really glad that you came to Rio.
Yes, that was an awesome event. One, thanks for having me here. And Rio, was one of the cooler events we've been to. One, it was just really great to see that we're growing in the, I would say, Stellar ecosystem. It was surreal to just walk across a room and talk to 10 people that we're working with. So really good opportunity. Rio was fun, a blast as usual. And so appreciate the opportunity. Appreciate the opportunity to talk more here today.
Yeah. Well, I mean, speaking of Rio, when we think about Brazil just generally, and we see so much activity in Brazil, they've transacted over $318 billion in crypto last year. So that's nearly a third of all crypto activity across Latin America. So it's proof that people outside the US are really hungry for this tech stack and that the future of open finance looks like, which is why it's so interesting about what you guys are building at Etherfuse. So most of the industry is focused on the dollar rails, but you're really bringing and this is, I think, a really, really important thing, like the local currency bonds on chain. It's something that I think really demonstrates where the future is, because you can't just have dollar currencies. You can't just have the dollarization globally. That makes no sense for lots of economies. So it's a powerful idea. So let's get into it.
Just two points to that is one, the active growth in Brazil is just a good contrast compared to, say, Mexico, of a country doing it right. So you see Brazil growing with cryptocurrencies. They've created strong legislation, and they're engaging in ways that let people know where they stand, compared to Mexico, which is also a great country, but I would say they're not doing it as well. And so just that growth and the added opportunity is strange to see. And then, of course, we view the stable bond product as like the solution for emerging markets. If you look at traditional FX, they have tried tons of solutions to make FX seamless, like CLS, which is the major clearinghouse for continuously linked transacting. There are only 18 countries that they let in, so all the emerging markets get excluded. So the blockchain really is this only fair and open and equitable way to ensure that everyone's included and that they can also take advantage of real-time cheap FX. And we view stable bonds or the short-term treasuries encapsulated as like an interest-bearing token, the primitive to facilitate that.
So it's interesting, though, that you just talked about that Mexico, we haven't seen as an industry a lot of growth with respect to crypto and blockchain. And so why choose Mexico as the first place to start? And also, I know you just said what a stable bond is, but I think maybe clearly putting the wrapper around that for this audience would be great.
Cool. Yeah. I've made the big mistake of starting two threads of conversation. So we'll wrap back up to it. My fault. But so Mexico, well, Etherfuse we as a team have always said, how do we differentiate ourselves? Like, there's a lot of people doing stuff. How do we not do the same thing as everybody else? And so one was just, we looked at the world and said, okay, there's a huge bias towards US denominated assets. and there's a lot of smart people working in this space. So, okay, we're smart too. Maybe we can compete here, but we're not like contributing like what only we can do, you know? So we really like looked at this missing opportunity as non-USD primarily focused assets don't exist particularly in any, in our opinion, sophisticated way. There's a lot of people trying. And then, so, we took a step back and said, okay, where do we do this? When we started 3.5 years ago, 4 years ago, the US was very anti crypto. And so
Mhm.
we couldn't even do it from the US, And so
Right.
we
Boy,
really,
what a different world we're in today.
no, it's nuts. It's absolutely nuts. It's great. We, in the beginning, we like were begging people to give us an account to be able to operate. And now we have countries coming to us and saying, will you do this here? So the change has just been dramatic. We really look to where could we go where we're needed. Maybe I'm not, but I feel like I'm a little bit older than a lot of the crypto people. And so I was really like, can we do something very hard that we have the skills to do? And if you've met Etherfuse team, like everyone who works here could work anywhere, but they're really great people and they want to solve a hard problem. So we looked at Mexico as like, okay, it's super hard, but the country has all the characteristics of need for the blockchain. And so if we can put our talents and our efforts here and be successful, we'll have done something that's good for both Mexico and the world. And so that's why we went to Mexico. And sometimes we regret that, but sometimes we don't. But the main thing that I think is different is Mexico kind of takes like this hands-off approach. Like our regulatory umbrella is Mexico saying, we don't think that what you're doing is wrong. It's not like an approval per se. It's more like a no action letter. And that's a huge difference, because in Brazil, you could probably operate more confidently, where we, really get a lot of feedback, a lot of information from our regulators, do a lot of compliance, because it was more, it's just a different way of doing it, if that makes sense. So,
yeah. I think that, and so choosing Mexico and choosing this particular asset, tell me again, stable bond, how do you want to define it for this audience?
So a stable bond is a reward bearing token, or you could think of it as an interest bearing stablecoin that is 100% collateralized by short term treasuries of that country. So we have stable bonds issued for many countries, and each one of those has assets collateralized and custodied in that country that are treasuries that are 90 days or less until maturity. And so we call them cash like equivalents. And what that does,
essentially, it's government debt, right? I mean, it's basically the government taking a loan and leveraging that for its activities.
Exactly. And some people would say it's one of the safer assets that you can invest in. It's the way you save in a local currency. But what really stood out to us is, if you look back in history, the main thing that helped nations grow was more of a bond product and not so much a currency. So crypto started with currency first, and that's happened before. And we just noticed that bond was missing. But the bond is also like, it's responsive to market conditions. So when we thought about emerging markets, given ease of access, someone hold like the Mexican peso or the dollar, they'll hold the dollar. So how could we compensate or incentivize people to hold the peso? And short-term treasuries are forced to compensate for their risk compared to the dollar through yield.
Right.
And so if we could capture that and create the same utility as a stable coin, we could incentivize people to hold the foreign currency at a higher rate than just the US dollar.
And I do think that we're seeing a world where when you want to protect the currencies in the different countries, they're going to want, they may allow dollars to come in, but they're going to want that conversion to happen to the local currency. And you've always said before that FX it belongs on chain, and that we should be able to move between currencies like the peso and the reals and not always go through the dollar. So how do the stable bonds help users and businesses to do this?
So, and for a majority of our existence, this has been theoretical, but on Stellar, this is not theoretical. This exists today. So I want to highlight, I'll describe this, but if you went onto Stellar Expert, looked at the market for our CETES product, you can trade it from the dollar to CETES for about 4 bips, which is an institutional grade FX fee. But anybody can do that. So that's a really amazing thing. So thanks to this Stellar team and the ecosystem for letting us do that. But really, the way we can do that is we created a product that is like a standard token that tracks the FX rate of an asset and the yield of an asset and puts it together in like a product. And so when we want to LP marketplaces, we're not LPing fiat together. We're LPing like this bond product and a US product or another currency. So if you think about it, these are kind of like synthetic access to real assets in a corresponding country. I'm trying to get my fingers right because anyways. So historically, when you want to do FX, you need like a direct link. You need pre-funded accounts on both sides. That pre-fund has cost involved, and you need to have some trusted exchange. Well, we just have pointers to buckets of collateral. And so when that FX happens, even though it's changed wallets, the actual assets aren't necessarily changing or have cost, and those assets are productive. So they're earning yield. Because they're earning yield, we can reduce fees and we can use those as a revenue mechanism. But when someone wants to sell it, they bring it to us where we have an integration. We burn the token, we sell the asset, and we send it to your corresponding bank account. So there's no kind of real cross border of a real asset moving. It's the synthetic representation facilitated on the blockchain. And when it comes to moving to fiat, it's free because by the time we have it, it's denominated in that currency and we have direct access to that banking infrastructure. So I don't know if that makes sense, but so much, but there's a lot less of a need to pre-fund accounts that sit there in an unproductive way to facilitate this trade. We have an interest-bearing productive asset on chain. You can swap it according to the rate that's promoted, which is very cheap. And when you want to off-ramp that, it's in that country being off-ramped locally.
And so when you actually see this play out, so when you see that the everyday people can actually save and transact in their own currency instead of the dollar, who feels the impact first? Is it going to be those SMEs? Is it everyday users, everyday savers? Is it the builders that are seeing it? Like, who sees that?
I think, there's today and tomorrow, right? Today, the people who see it the most are, I'd say, people who do stablecoin cross-border payments. We can facilitate an extremely cheap price for them. And so they're seeing it. I don't know that yet they're passing that value on to their users. They're kind of just capturing that. But, extrapolate, this growth over the next 5 years. If stable coins are the new rails of the financial future, which I think they are, if I just want to wake up, assuming, I'm a Mexican in Mexico, and go buy a soda, if I have to FX out of my bank account into a dollar and then FX back to pay the vendor, it's just like unnecessary cost.
Yep.
And so using our product, it's free, going from fiat to asset to back. Our revenue is capped by the yield of the asset. So the end user will fill it through a reduction in cost and a reduction of friction. Stablecoins are just way smoother than current fiat and current fintech today. So the person who feels it in the end is the user. Right now, it's more crypto companies, more payments companies, market makers, and things like that. But our goal is to just make it accessible to anybody and reduce costs and improve efficiencies.
But I think it's so important that SMEs are involved in this already. And I get it that a lot of them are crypto focused at this point, but I think that this is the kind of thing which is game changing for those smaller businesses that are trying to create space for themselves and to be able to hold an asset that generates yield that could be in the currency that they need it to be in. It's just so important, and that it's protected, right? I mean, the government debt piece is a really important way to think about why, even governments that don't have a long-term, like they haven't had a great history of repayment on a lot of things, like the debt is going to be priced based on that. So you're always going to have that risk built in, which is a great way to think about why this investment is a good one.
Yeah, I think locally there's little risk because there's no FX risk. if your government defaults on bonds, you have more problems than just your bonds. Even if you had fractional banking fiat, it would be way worse too. So um, for foreigners who want to buy your currencies, they need that incentive to hold it to facilitate a bunch of stuff, marketplaces and that yield. The governments are forced to compensate with yield. So historically, we've seen that governments are more than happy to inflate their currency, maybe not tackle hard problems because there's not a lot of repercussion. It doesn't seem like people vote really or understand that their money's inflating locally, but
They
they
don't understand
still.
that money's being printed all the time. I think that's the interesting point that people sometimes don't get.
Yeah, but a foreigner will see it, and will understand it because they have a reference to their currency. Now, because of that, those same governments who inflate their currency have to create incentives to entice other people to buy their debt. And so it almost is, you know, I'm trying not to sound like arrogant here, but it's just such a good idea, to capture to capture the yield that forces you to behave appropriately as a government to build that
Well, and I
trust.
don't think a lot of people, and this is one of the things that I think is really important. I'm going to just reiterate, like that the risk is built in to
Yes.
what the yield is and to what the return is. And that's such an important thing when you're thinking about debt like that. So I do agree that it's a great product. And I think that it's one that we should be, it's a great way to capture those local currencies. I do believe, and I've said this many, many times, that I think that it's unrealistic for us to think that the dollar can capture all of what's happening on networks like Stellar. People want to hold dollars, but you need to also think through like the local government's needs to protect their currency. And this is a great way to allow that transfer to happen. And it might be, and I don't know how you think about this, but we do hear still some about CBDCs or stable coins being issued. But I do think that if you think about these bonds, this might be the way to go instead of those other two options.
I agree. I think we're thinking probably one or two steps ahead of other people. I think we'll get stablecoins out there. It seems like we have a stablecoin product too, and people ask for that more. And
Yeah.
we come back and say we have the same thing, yield bearing. And I don't know that it's clicked yet. It's possible we're a little early, but I think it is the answer. I think that countries, well, one, I'm from the U.S. I was born here. I love being here, and I love my country. So I'm going to say this under that context, right? It's not good
Set the
to
stage
have. Yeah.
for a criticism. Here we go.
It's not good to have one country represent the sovereign decision making of a financial product for the rest of the world.
Right.
The incentives for us aren't good. It's good for us to have healthy counterparty economies. I mean, great. I'm happy with us winning, or doing well, or being responsible. But we do need healthy competition and counterparties. And the world today is like 50% dollar, 50% everything else. It's close to that. I do believe we'll see a regression to the mean.
Yeah.
As stablecoins become more adopted. One, I think we're going to see countries force it. And two, I think the efficiency gains of just not having to FX to buy a soda or pay for cable will move in that direction. We just had a very big country reach out to us and ask us to issue their debt. And one of the things they said, it was just ironic because 2 years ago I've said this, like, this is the nation's sovereignty is at stake. They said, hey, we require these things. And it was basically like a lot of transparency from us. And they said, because our sovereignty is at stake here, in an email. And I was like, whoa, they're starting to get it,
Yeah. No, I think it's actually something that we see a lot of central banks really focus on now, like in their, but they have always been very worried about the dollarization of their countries and of their currency. So I just think now they're understanding that they can put this into their regulations. Frankly, it's a lot about crypto and blockchain and how that can be leveraged. So I do think that this is something we're going to see more of. And I also really firmly believe that having this nice exchange and the ability to have local currencies to support what's happening in country, but leveraging the dollar to get money into the country sometimes, or maybe to get money out of the country sometimes, like just depends on whether you're trying to export or import your talent. So these are really interesting areas, and it's something that I spend a lot of time thinking about because of the conversations that we have with these central banks. So you're on the cutting edge of where I think things should go.
Yeah,
Um,
I mean, thank you. That can be good or bad too. We feel it. Like we're like, are we too early? Sometimes we're going to be successful. And we're going to figure this out. But I agree. The cutting edge is a two-way street. It's a double-sided sword, I guess, is what so to speak. So, but I do think we are very early in this idea.
Dave, we were focused on stablecoins when stablecoins weren't even a thing back in 2014. I mean, talk about early. So I
Yes.
feel like it's one of those things where it all comes back around to roost where it is.
Yeah.
So maybe that's actually the next sort of area. For us, I talk all the time about how important interoperability is, how important making sure that open systems continue to exist. It takes more than one developer to sort of make this market work. How do you guys think about interoperability at that level? So making the stable bonds something that any builder can integrate, remix, build with on Stellar without friction. That seems like that's what's important to you. Is that like how do you inform your thinking around that?
Um, I think it's absolutely critically important to, I would say, squeeze out the efficiencies so the future we want to happen actually happens. And this last 2 weeks, we've seen a lot of people start to like understand that the risk-free rate being abstracted away from the common person is like a huge unfairness. Um, and it's kind of funny, like we're saying, we've been thinking about this early. When people start to get it, you're like, great, and then you're also like, come on, guys, like we were thinking about this 2 years ago, you know. So it's nice to see everyone finally start to understand that. But what does it do? It like inverts the revenue model of a lot of things. So historically, you would have like an application that would create some consumer product or service, and that would have its like independent fee. And I'm trying to, sometimes I'm not great at explaining everything, but the fee always has to be more expensive than the risk free rate. So, because otherwise, why does this service exist?
Yeah.
It won't. And so before I even get to a bond, I have this service that has a fee more expensive than bonds. So think about, I'm not going to call it names because we like these people, but a financial product that sends money back and forth.
Mm-hmm.
They have some fee. And then below that, they invest those funds from earning that fee into bond product and they keep all that. And
Right.
so we view by moving that up a layer so that you can build the product on top of that, you've eliminated like this need to charge a fee to the user or at least subsidized it quite heavily. So we feel we've exposed the interface of the sovereign bond to the user and to the developer. So you can take out like one or two fee layers and increase those or give those efficiencies back to the user. And we see that today. We see that in our FX markets. We also think like once you bridge a sovereign bond on chain, you've essentially on ramped that country by creating a gateway to mint and burn for free.
Right.
So it's very important. It also improves the existing interface. So the interface of a bond today is like they have a time period, they expire. You
Yeah.
either have to do something to renew that or pay somebody to manage that renewal process. Where a stable bond by default inverts the behavior where
Right.
as you hold it, it's compounding and you decide when you want to stop compounding. So there's no like asset manager I need to pay. It just works. And so we actually view like this interoperability, this freely transferable product, and the interface of the blockchain as having improved the experience of the bond while also lifting the interface to the common person.
Well, you just said that stable bonds push the yield back to the user instead of the issuer. And that's a pretty radical shift. So how do you see this model creating healthier, like local ecosystems where wallets, liquidity providers, and all the others can benefit from keeping value in their own markets?
Well, I think one, it by exposing access, it sets like the cap for a fee. So say I'm a wallet provider and I want to just do multi-currency savings accounts. Well, now I have ease access to this yield and everyone else does too. So at most in a competitive market, my fee is that yield to no yield,
Right.
And so because it's like so easy for me to get access to, and I could now have a person or a team of 3 build a product on top of it, I have kind of set the limit of what a fee could be to be passed on to the user, or what revenue capabilities I have. So for the most part, I've made it so like the user experiences, this is a hypothesis of ours that we've seen. Okay. The user doesn't necessarily even have a fee anymore because the developer or the business has bond yield readily accessible. Now, whatever that cost over that bond yield might be, it's heavily subsidized. So the biggest thing is, by giving equal access in a competitive market, you've created this commodity and this race to zero as the bond yield. So the fees will be heavily reduced. So we see today, maybe not, today's pretty good. It's better than it was 10 years ago, but sending money across borders was like 700 bips. And that's because there's like 16 layers of fees involved where,
Intermediaries, yeah, all the the gatekeepers.
yeah, so we view our hypothesis of, now that we've exposed this on chain, the fee is just the bond yield that you may forego on keeping by using that service. So it's I don't know if I've explained it appropriately, but that bond yield
Yeah, well,
now
let's take it to the numbers. Like, let's say that your yield is 2%, 3%, 3. Let's say your yield is 3%. You can take the fees, like the provider could keep 1%, you get 2. So
exactly.
your fees are still in there. There's still a fee, but it's that you're actually gaining yield on that. And so you're at least getting the 2% of that 3%, which is kind of like the service that they're providing to you, so that you're
Yes,
paying for that service, but you're not layering fees on top of it, which is, I think, a
exactly.
really important distinction between how things are done in the offline world and certainly in the off-chain world. And certainly sometimes, like even right now, one of the things that's frustrating to me is that when you see these kinds of products, or any kind of product like this brought on chain, a lot of times we keep everything the same instead
Yes.
of actually exposing what you've exposed, which is this transparency layer of, this is actually what's happening, and this interoperability layer of allowing everybody to sort of get in the mix.
Yes. Yeah, we wanted to do something radical, and we think we have. We have like 20 more stable bonds coming. I would say end of November, so we're excited about that. There's a lot of work to be done still, but I don't think we've seen these currencies in any meaningful way having been bridged to the blockchain or yield opportunities for those currencies. So we got a lot of work ahead of us, but we're going to do it together, and it'll
So
be
I've
very.
heard you talk about that you're going to hit this goal. Etherfuse wants to bring over 100 sovereign currencies on chain, or 100 sovereign currencies on chain. What happens when you, number one, when you hit that goal, and what does that look like for you?
So I think our goal is to be an issuer, and to ensure that those assets are the safest, most well protected, most liquid, most freely available assets in the world. So that's what we want to be our focus now. We're so early that we have to build the products that we hope other people build to get the use case to happen. So what I would hope it would be is, we are viewed more of like an AWS of sovereign debt on chain, where we can really focus on, okay, is our compliance system, is our accounting system, are all these assets, all the relationships, do we have democratized custodians? Like, we really focus on building the strength and trust behind any asset that Etherfuse issues, and we've exposed those to the world, so that your everyday startup team can just build
Yep.
bank accounts, can build checking accounts, can do hedging. Like, if you wanted to create a hedge product in TradFi, it is so difficult, like near impossible. But on Stellar with stable bonds, you can do it today. On Blend, you could be a 16-year-old. It's very simple. So if I want to make a complex payment across border, but I want to hedge it against my currency, I would need so many things to do that in TradFi, but all I need is Stellar and a wallet today. And
I
so
love that. I love
we've
that. And that's what I was going to say. I mean, in terms of like what you, like, one of the things I always say from the foundation standpoint is, it's our job to like know what the gaps are in the ecosystem, but it's not always our job to fill those gaps because you want
Yes.
other entities to come in to fill them because you can create business models around it. So I heard you saying that there's a lot of things that you guys are doing now that you wouldn't necessarily like to be doing. You'd like others to do that. So what role can the community and the Stellar ecosystem and Stellar itself play in helping like vision that scale, like scale this globally?
Yeah. So it is profitable to maintain an FX market on SDEX or Aquarius today if you LPR assets and you can maintain what I'd say is a 5 bip spread. It's profitable for you to do that.
I think I'm going to back you up just a second. So this is actually something I love, but I want you
Yeah.
to explain it. When you talk about LP the assets, explain that to this.
So there's this open marketplace, an AMM or even an order book, and this is how people exchange assets. And unfortunately, in crypto, we're so used to saying like I'm going to exchange like Dogecoin for something else, and you kind of get that. But this actually works with real things too. It's a free marketplace because our assets earn yield, like trusted yield. If you're in Brazil and you had any sort of network there, you could LP our Brazilian product and facilitate a marketplace. So LP means you buy our asset, you put it on the marketplace, and
There you go. Okay.
you charge a fee for people to trade. So say you want someone to go from the US to Brazil. So they're probably going to buy USDC or USDT. So if that marketplace existed, you would earn money because you're earning transaction fees. You're also earning yield off of your currency. We have a model to demonstrate how that is very profitable for you to do. But we have to do it ourselves because we haven't shown the world that it's possible yet. So that's one. We've had to build our APIs so robustly so people will use them because they may not understand yet. But getting wallets to actually use it is it's the cheapest way to send Mexico to on and off ramp money into Mexico in the world, hands down. But we're so early that it's like how are people are still using an intermediary that charges them like 150 bips.
Right.
And so we're having to build those things too. Multi-currency wallets. Like we have the safest, quickest way to hold multi-currency wallets. You could compete with Wise or TransferWise tomorrow, but we're having to build those things too. I would love to step back, and that's okay. It's just we're early and we have to demonstrate.
Yep.
Even MXNE. So MXNE is, we call it a sovereign coin, but it's a stable coin. It's a Mexican denominated peso, and it's the fastest growing Mexican peso stable coin in the world. We had hoped that when we first issued the stable bond that people would get, I don't need to go through all this complex compliance stuff. I can just collateralize my peso stablecoin or my Brazilian stablecoin with Etherfuse product. All the hard work's done. I can now issue a stablecoin. But we had to do it first to show people it could be done. So we didn't even really want to do that, but we had to do it. And that's what I mean is I hope that we become more the AWS and less the application developer. And in each one of those instances, the app developer can make money and we can show them how. I just think we're a little early and people are starting to understand that.
I do think that this is a space, though, where we see people catch on very quickly with these kinds of opportunities, and that it just takes a few. So once you have a few that sort of jump onto it, then there's going to be others. And particularly if you get wallets, and I see that you're already getting wallets interested in like doing this and holding the assets, and you're seeing some of these pools end up certainly on Stellar in between your assets, and those are things that are going to be super valuable. But I hear you. It's really hard to be one of the first. I mean, I feel like there's so much that we've done at Stellar where we've come out, and I mean, I think about now, like 7 years ago, these aren't we were still on the same path, but it's taken till now for people to be like, oh yeah, asset issuance and payments, that's the thing we should be doing. And this is like the stuff that we should be focused on. And we're like, oh yeah, we were doing that, 10 years ago. But
and don't get me wrong, we're going to do it. And it's working, and what we're doing is working. It's just we are having to do less of what I think differentiates us, what other people could do. And so as we start to continue to increase in popularity and usage, we will scale back what we build um, to just focus on making the most trusted assets in the world, and doing those in a very secure and safe way, which we already do today, but we also do it with other stuff too. And so I'm excited for that because it will help us step back quite a bit and really focus on winning this space and providing this value to the rest of the world.
So when you talk about that, and you're talking about it from the stance of like the builders, because there's so many builders that listen, and so many builders that are looking for what is the thing that they should be focused on. I mean, you guys don't have a huge team right now. You've done a tremendous amount of work with the team that you have. That I think was it 3 to begin with, right?
Yeah, we were 3 for 2.5, 3 years almost. Yeah.
Yeah, and now you've grown a bit, and so it's good because you're taking on, you're doing more assets, figuring out more things to put out there. But for builders listening who want to create the kind of real world impact that you have actually been able to do with Etherfuse, what's one thing that you've learned about staying focused and getting things done in this space that you'd like to share?
I think that I don't know if this is good advice or bad or whatever, but I'll just say it. Like when you choose to do a startup, you're choosing to say, I'm going to do something where the odds are against me, but I believe in it, you know? And I think you can get caught up in, you get into a space, there's so much opportunity that you're like, okay, we'll do this. Okay, we'll do that. And like, there's a shiny new thing all the time in crypto. And so you're like, let's pivot to this. You kind of have to have conviction. Not kind of, you really need to have conviction in what you're doing to the point where you're willing to forego like a short-term gain to see your vision through. And that is very hard. It's easier said than done. We've glorified startups in the sense that people saying, I got told no 50 times. You almost don't internalize it,
Yeah.
being told no 50 times is really hard. It makes you second guess everything you've done. And being told no at the same time there's a shiny new object, it
Yeah.
makes so you have to have conviction in what you're doing to the point where you're willing to fail for that conviction. Obviously, you need to be open to pivoting given some information, but I have this phrase I say, ignoring is the new reading in today's world, where when I was a kid, it was like, learn how to read. And now it's like, learn how to ignore Twitter for a day, or whatever. But you kind of have to have some conviction behind what you do. And if you look at Etherfuse, our history is insane. It's like a bunch of Americans went to Mexico, issued short-term treasuries before almost anyone but Franklin Templeton, but we did non-US when everyone said that was crazy. And now we are trying to focus on that and build up marketplaces. Like, no one has said that this was a good idea. But we
Well,
did
some
the
of
work.
us have said that this is a good idea, but I hear you. Like a lot of people were like, I'm sure that when you went out to get investors or you're talking to the market, it's always complicated, right? Because they're like,
Yeah, yeah.
well, where are your users and and you're still in the building. You were still in the building phase for so long.
Yeah, and I mean that in historically, no one said, "Here's a good
Yep.
idea. You're gifted."
Oh,
Now
yeah,
I
yeah.
think now I think the world is starting to see that it's not only a good idea; it's revolutionary. But historically, there it was conviction and like self drive and like our ability to like create a differentiating factor for our company that helped us like take the first steps and move forward. So my advice is to find something that you believe in that helps you weather that storm, because you're really like fighting to create a space for yourself and to prove yourself, and it's really important.
Oh, I love that. I mean, it is how many days have I thought about all the things that we do and then think about like why we're doing them. And it's the why for me. It's the why and the people, frankly. It's the
Yes.
people that you work with and then the why you're doing it that actually keeps you in the game. So I'm glad that you're still in the game on this.
Yeah, we'll be here forever. We have the wins. I would say we have the direction, the way the world is changing is only reinforcing like our ability to succeed. So we interest is all time high. We're onboarding people every day. We're executing on our products. So it's it's pretty awesome. I mean, I'm excited to see when we start getting competitors too.
Yeah.
That'll be when you've really made it.
Isn't
So
that the
far,
funny thing? I always say that. People are always like, "Oh, we don't want competition." I'm like, actually, that is
actually, you
when you
do.
know you've won. Yeah, that
Yeah,
is when you know you've won. All right. Well, one final question. So, in a world where Etherfuse becomes more and more like AWS, as you've said that you want that, what does the future with blockchain look like in one sentence? Blockchain, Etherfuse. You can sort of blend the both.
I would say equal access to all financial services across the world
Mm.
for free or near free, for the user. Yeah, I think that exposing the risk-free rate enables us to transact today pretty freely.
Oh, I love it. Well, it's funny. Like, I love our conversations, Dave. I think that I think what you're doing and what the team is doing is great. I love that it's been like a super scrappy early days, nimble team that's really moved to make this work. One of the things you recommended to me was a book that I read, and I felt like it was great. It was called The Mystery of Capital. I thought it was great to be thinking about like capitalism and how capitalism works. And this is part of the reason why I think that what you've built is actually something that is going to be useful, because you have that background and understanding of the challenges in different markets. So it's
Well,
always
thank you.
wonderful to talk to you.
Stellar's been awesome and pivotal in our success too. And I'm excited to see. Right now, institutional grade FX is on Stellar today. So you're wasting money by not using Stellar to send money from the U.S. to Mexico, but you can easily do that today with just a wallet. So I hope more and more people every day start to realize that.
Well, thank you. That was a great commercial that we're going to like the tagline that we're going to pull out. Thanks so much for joining me. This has been a ton of fun, Dave, just to see you in this environment and always.
So that's it for today's episode of Block by Block. A huge thank you to Dave Taylor from Etherfuse for joining us and for sharing how bringing local currencies on chain can help people save, earn, and build stronger communities. It's a reminder that open technology isn't just about access, it's about empowerment. I'm Denelle Dixon, and we'll see you on the next episode.